Even after the recent decline, Boroden points out that gold remains in a longer-term uptrend. That is pretty beautiful, I have to tell you. What is that called? That's a pattern of higher highs and higher lows. Notice he doesn't take out that last low. That's exactly what you want to see in a chart. More importantly, when she looks at past declines going back to 2013, she sees this pattern. It's what's known as symmetry. That's what she looks for. Many of these declines have been very similar in size, taking gold down from 235, 262. When Boroden ran 100% projections of these previous swings, they suggested that the precious metal could find a bottom somewhere between 1,827 and 1853. Well, sure enough, that's about where gold has repeatedly found a floor of support over the last couple of months. It's pretty incredible. Right now, it's over $1,900, all right? That's up roughly $50 from September lows. As long as gold holds above that level, Boroden believes the long-term uptrend remains intact, meaning it can resume its long march higher. How much higher? Look, based on Fibonacci methodology, she thinks it's going to take out 2153. That's roughly 13% from where the shiny stuff is currently trading. I want that money. I hope you do too. Again, that's only works if gold holds above the mid-1800s, which I think it will. That said, Boroden's pretty confident that gold has already bottomed because of what she sees in the daily chart. So let's take a look at the daily chart. That was the weekly. So we'll go to the daily. And what we're going to see is last week, the precious metal, it pulled back and retested the September lows, okay? So, I mean, we saw that this very quick pullback. The lows held, and now gold's bouncing around again. More importantly, though, you've got gold. Remember how Boroden operates. She looks at past swings in a given security. Then she runs them through that rubric of Fibonacci ratios, a series of numbers that repeat over and over again in nature, like flowers, pine cones, snail shells. The result, Fibonacci Queen gets a series of critical prices or critical dates where a stock or commodity or an index is likely to change its trajectory. For gold, Boroden saw a cluster of Fibonacci timing cycles that predicted an important low in October. This is the important low, October 29th to 30th. Sure enough, the actual low came in on the 29th, so there's a good chance that that was the turning point. She has been so spot on this. That's why we're spending time on it. Now, what would make her even more bullish? Okay, Boroden wants to see gold take out some key resistance levels. There's one up a few points from here at 1910. It's kind of interesting level. Another one, these are very tight here, 1919, 1922. Clearly, these two hurdles, along with the October high at 1939. If she gets beyond those, I mean, it's going to be really smooth sailing. As long as the precious metal hangs in above the mid-1800s, call her a buyer. I think she's going to be dead right. You know how much I like gold here. Now, here's the bottom line. The charts, as interpreted by Carolyn Boroden, suggest that gold prices could have a lot more room to run, okay? And that currently fits with the current backdrop that we see in the news. So if you don't already own some, perhaps it's time right now to pick up some bullion, or maybe some GLD, the ETF, or maybe some shares in Cramer fave Barrick Gold.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.